Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is December 9, 2024. In this Kickstart video, I'll take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. It's also the start of the new trading week, so we'll keep a view of that. So let's get started. Let's start by taking a look at the euro versus US dollar. And on Friday, we had the US jobs report that took the price above this swing area target up here between 1.0592 and 1.06097. The price high reached or tried to stretch up toward the 50% midpoint of the November trading range, but fell short of that by a few pips and rotated back to the downside, closing near the 38.2% retracement. And trading here today, we moved lower, moving back toward this a cluster of moving averages, including the 100-bar moving average on the 4-hour chart, the 100 and 200-hour moving averages, although three of those moving averages come between 1.0530 and 1.05406. Price found support against the lower of those and started to push back to the upside. So we're seeing down and then back up and now back down again. We are staying below the swing area up here. Ultimately, if the price is going to go higher, and the bias is a little bit more to the upside, staying above these moving averages right through here. But if the price were to go higher, then we need to get above this swing area and 50% and get above the 200-bar moving average on a 4-hour chart. Alternatively, if we start to move back below this level, we head down toward this trend line, connecting 1, 2, 3 different points along the trend line right here. Get below that level, and we start to look down toward this swing area down through here. Let's take a look at the dollar versus yen next, and again, we'll look at the hourly chart. And on Friday, we did see the rotation to the upside, where we found resistance against the 200-hour moving average. That's a green line in this chart, then rotated back down and through the 100-bar moving average off of the data and the volatility from the U.S. jobs report, finding support against this old swing area right through here. You have to go to the 4-hour chart to kind of see what the importance of that is. And if I go back in time and take a look at this area through here, this is where it was all defined, mostly through here, where we had resistance and then support and then rotated to the upside. So finding support against the high of that area right through here gave the buyers to go ahead to push to the upside back to our hourly chart. And in trading here today, what we're seeing is a rotation to and through the 200-hour moving average right here at 150.35. And we're extended above Friday and Thursday's highs. We still have the week highs from that came in near the 151.20-ish type area. That level corresponds with this swing area. I guess I could put a yellow box around this. Oops, not that. Put the yellow box, this box, around the area right through here as a target level on the top side for trading today, 151.19 to 151.27. It looks like somewhere around there. But getting above that level would be needed to increase the bullish bias and have traders looking toward the 38.2% retracement of the November trading range. If anyone who follows me knows that we need to get above that level in order to show that the buyers mean business. And then alternatively, the 200-day moving average, go look back here where the market found resistance against that level, push to the downside. We need to get back above the 200-day moving average to increase the bullish bias for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. Again, we'll look at the hourly chart. And what I see in this chart is the market paying attention to two moving averages. One, the 100-hour moving average on the downside. Also, this swing area down through here. A number of different swing lows and swing highs came into this area, either as a support or resistance levels. And you can see the number of different times, including toward the end of the week and on Friday. And then today, we came down to that swing area, also stayed above the 100-hour moving average on the top side. We rotated back up to the 200-hour moving average, and whereas on Friday we moved above it off of the volatility from the jobs report, today we, with the price moving through that 50% retracement and up to it, this time we found willing sellers against it. By the way, it's a 100-bar moving average on the 4-hour chart. It's not the one, or it's a 200-bar moving average on the 4-hour chart, not the 200-hour moving average. So be aware of that. But we found willing sellers against that level. Support against the 100-hour moving average, resistance against the 200-bar moving average on the 4-hour chart. Ultimately, we're going to need either a break above that and then above the 200-day moving average to increase the bullish bias. Alternatively, if we continue, if we were able to stay below the 50% retracement, that might be an early signal today to move back down toward the 100-hour moving average, and look for the 200-hour moving average right below that. We'll look for the 100-bar moving average on the 4-hour chart down here as a target level. So that's my technical view of the three major currency pairs to start your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.